Hey everybody, it's Mark Iggy. Welcome to another Market Pulse. Today is January 10th, and we're doing a quick Market Pulse, but you know what? Not the best news out there. It's a lousy market today, and we are red yet again. I guess from last Market Pulse, we were red. We're still red. We went yellow for a little bit, but we're back to red, which means bad news is bad news, and good news is bad news. So today we had a job market report that said everything was great, and we got lots of jobs, and that normally sounds good, but the market doesn't like that because it means higher interest rates, blah, blah, blah. And we're going down. And so the market is red, which means you've got to respect the red market. What do I mean by red? It means when the market short-term direction is pointing downward. And right now we're going 3 weeks in. I made the market call, I think on December 12th or 13th, that the market was red. If you watch the market pulse from back at that around that time, the market told you that we were going lower. And sure enough, here we are 3 weeks later, we're still going lower. I don't know if it ends today, tomorrow, Monday, whatever. It's going to end at some point, but for right now, you got to respect the red. Like I tell all my people in the mastermind group that we have, it's like, look, don't be trying to be smarter than the market. You're not. The market is always right, 100% of the time. You just got to position yourself to be in the spot so the market makes you right when when you guess it right. Okay. So we're not trying to guess the market. We're playing the probabilities. The probabilities right now are to the downside. Let me show you what I'm talking about over here. So um, here's the market this week, and you can see we've got four red lights on the screen. And sorry, it's three greens, one green and three red lights on the screen. This should be a green light because it's now the momentum is to the downside. And so we are in heading lower, right? Like there's a support line here that you may see, but we'll see if it tests it and we'll see how it goes. I can't predict. I'm just telling you the propensity when I was over here telling you the market was going red. If you could look here, see that little red dot? That's when I told you the market was going red. And look what has happened since then. Yes, we've had a few up days, but generally from that spot to this spot has been a loss of a lot. Now, it hasn't been a really bad red market. It's been a red one. Some days we're kind of lousy. It hasn't been one of those calamitous things. Nonetheless, you got to respect the red. All right, why are we going lower? Well, the Nasdaq is below the 50-day moving average. Not a lot of good things happen below the 50-day moving average. Well, the S&P 500 is below the 50-day moving average. Well, the Dow Jones is below the 50-day moving average. Look at this action, right? Down, 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 down. Tried to bounce, couldn't handle it. Heading lower, probably heading to that 200-day moving average. The New York Composite Index, same kind of deal. Down below its 50-day moving average, heading probably to that 200-day moving average. I don't know. It might head to the 18,860 and bounce. I don't know. To me, I want to play this market a little bit to the downside. The VIX is up. That's the panic index. So the panic index is going up a little bit. I like to have it underneath these moving averages, but it's not. But here's why, guys. This is the Treasury yield index, and you can see the yield is climbing. So what's going on? The Fed is lowering rates by a quarter of a point. Okay, that's what they're telling you. Meanwhile, they're not, right? The market's telling them that they have to raise rates. So the market is raising the rates on fixed income instruments. And that's what's going on here. It's not the Fed doesn't have anything to do with this. The market's telling the Fed what they're going to have to do. That means they're going to have to raise rates, which is bad for the stock market, which is why you're getting red markets, right? And this is also why Bitcoin is selling off a bit, right? People are saying, well, I can get almost 5% in a treasury. Why do I put my money in these other things that are risk assets? I could just go into the treasury. I'm going to get my money back. Government, right? Although, don't get me started. I'll show you this chart, which is the TLT, which is the 20-year treasury. And it's just gotten decimated in the last couple of years by 50%. So don't be thinking this is safe money, guys. This is just what everybody else is buying and selling, and all the sheep are doing this stuff. But you're smarter than that, right? Bottom line, this is the macro stuff going on. You got to pay attention to it. So you can see this is down. This is a long downtrend. I don't want to be in treasuries anymore, right? Even though interest rates are going up, you can see this going down. What are you're gonna get 4.6%, and you're gonna sit through more down of 10%? Like that doesn't make any sense. 94 to 85 is like 10%, but you got 4% while you waited. Like you lost 10%, but you got 4. It doesn't make any sense. Treasury bonds are upside down and stupid investment, in my opinion. That's why we buy stocks and we sell calls against them. We make our own income out of that. But I digress. Okay, let's keep going. MicroStrategy, you can see, is kind of doing on a lagging basis what the market is doing, right? It's selling off. It's a risk stock. Now, I happen to think that long term, this is a good thing. But right now, this is giving you an opportunity to get in on sale, but I wouldn't get in right now. It's like catching the falling knife. But I just want to show you if you're following any of the MicroStrategy stuff that I talk about, it's not immune to these moves that the TLT and the indexes are showing. Okay. Here's another recessionary index, and this is the housing index. I've been talking about this for a few weeks, for a couple of weeks anyway. Look at this drop from 836 to under 700. That's a steep drop, guys. That means the housing index knows that we might have a recession coming. We might have a housing problem coming. That's telling us something. I don't know what it's telling us. It's probably telling us that we're headed lower. I don't know. Maybe. We'll see. All right. So you can see the Netflix is just getting hammered today, down 36 bucks, off 4%, down below the 50-day moving average. When these themes, which is what I just try to paint the picture using all these little dots, these pixels, all of a sudden you get this picture in your face that says, hey, this is what the market's telling us. Netflix is below the 50. Apple went below the 50. It was down $8, $9 a little earlier today. It's down below the 50. If you're selling calls, I'm suggesting, to my people that we start looking in the money. We got a red market, and the probability, at least right now, is slightly lower. Go slightly in the money. You still get $2.67, $267 per contract being in the money, one strike on Apple. Tesla. Look at Tesla. Now, Tesla is in a breakout technically, but it has a pullback coming here, and it's probably going to pull back to the 50-day moving average, which looks to be around the 365 level. I don't know whether it hits there or not. I'm not sure, but you got to watch out. Tesla, is trying to go up, but and it's only selling off on low volume, like some of these other names, but still, it's selling off, right? And so you got to just be cognizant. If you want to do Tesla and go in the money, here's when I printed this 390, and the 387.50s are around $1,158 a contract. It's good money. If you got 10 contracts, you're making 11 grand a week. And that's what we do. That's what I show you how to do. If you are in my group and if you're watching this, you know what we just talked about. Nvidia. So you can see Nvidia to me is just basically flat. There's not a lot going on with Nvidia. I've been talking about this. Everybody thinks it's the greatest stock ever, and it was, and it will be. But right now it's in that period of time where it's just consolidating. The sellers are getting out. There's new buyers getting in. That takes a period of time to be able to exchange those shares and get another bull run coming, which I think in Nvidia's case will happen. But you can see even Nvidia, if you go strike in the money here, 135.36, $1.36 in the money, you're getting $299 a contract. Pretty good percentage, right? MicroStrategy, like I talked about before, this is the big one. Just going to point it out. This has got a lot of juice, right? If you go MicroStrategy, it wants to fill that gap. I think it's headed for the 270 level, and it may get there, it may not. We'll see. It's kind of holding up here, actually. But if you want to go at the money, you're picking up $1,700 a contract, pretty darn good percentage. But if you want to go even in the money at the 310s, you're picking up just about $1,000 a contract, even protecting yourself with $2,815 of cushion, right? So that's a good thing to be in the money right now because MicroStrategy, as you know, if you trade it, moves all over the place. All right, last one, and I'll end on this. Amazon is still technically in a breakout from that $200 level, but it is pulling back probably the 200-day or the 50-day moving average right in here. But Amazon still looks good. So as long as this market kind of shores up a little bit, maybe turns around and goes back up, Amazon's they don't have any problems coming up. Now they do have earnings coming up in about 3 weeks, so you got to be cognizant of that because that can send it one way or the other. But right now, I wouldn't worry about Amazon. I would worry about some of the other stuff that I talked about. Listen, thanks for being here. As always, I appreciate your time and attention. I hope you just get a picture in your brain about how you can position yourself in this market because this is not an easy market to make money in right now. It was earlier last year, late last year, but it started to turn. And these things turn, and cycles take time to work themselves out. But there's always a green market coming, and I think it's coming soon. Meantime, I'm playing it to the downside. Have a great weekend. Thanks for being here, and I'll see you next time on Market Pulse. Bye.